forthcoming. You can actually pre-order it if you want to be, like, you want to get it as soon as it is published. So again, so what are the parts of it? Well, if you follow this, if you look at the strategy and you look at the history of the strategy, it has made money. It has beaten the market. Okay. Again, just because it has worked in the past, it's not a guarantee it's going to work in the future. That's also something which, it has to be clarified. It's necessary legally that any investment in risky assets is risky. So the plan in this book has produced, it has beaten the market. The plan in this book is replicable. You have a certain strategy, and it is long term. It doesn't claim, to be like, it will not make you rich immediately. This is really for people who are have a, let's say, 25 to 50-year investing horizon. Okay, but let's start with me and finance. So when I arrived at the University of Chicago to begin my PhD in finance, I got a bit of a shock. My expectation was that I would be taught how to make money. However, I was told markets are efficient. Analysis won't get you positive alpha. So we are not going to teach you any analysis. We are not going to teach you how to look at past stock prices and make predictions about future stock prices. We are not going to teach you how to look at financial statements and identify which firms are going to have superior returns. So basically, we're not going to teach you technical analysis. We're not going to teach you fundamental analysis. So analysis won't get you positive alpha. We are the Borg. You will be assimilated. I'm just kidding. It was only the first part, not the part about the Borg. But yes, no positive alpha. It's a shock. Engineering background. I knew if I studied more engineering, I would build something like a plane. If I studied neurosurgery, I would be qualified to heal people, operate. And how could I make a living if I wasn't taught an analysis which would make money? I shouldn't have worried. PhD finance graduates from Chicago had the highest mean and median incomes. That's not surprising. It was the very best degree with the most accomplished senior faculty. Chicago, home to finance greats. And also economics and finance, related subjects, or you can say finance is a part of economics. Okay, so back to efficient markets. Numerous studies have actually shown that markets are mostly efficient. Now, I'm telling you that I'm going to offer you a plan to beat the market, right? So, but numerous studies have shown that markets are mostly efficient and anomalies disappear rather quickly. I should not say that I'm going to offer you a plan which is going to beat the market. I'm going to offer you a plan which has risks, and then you decide for yourself if you like the plan, and then you follow it. So, notably, what academic studies have found is that finance professionals do not outperform the market at an average. So, then what is the deal with this book? Well, it's based on my observations about the market, and my belief, which is of course risky, is that you cannot really predict when I mean, you can predict when the market is overvalued, but you cannot predict when it's going to correct itself. So you predict that the market is overvalued, so you go and short it, and the market remains overvalued for a I think the famous somebody said that the market can remain irrational longer than you can remain solvent. Okay, so predicting that the market is overvalued, and your prediction may be correct. However, it's not a way to. I can't like confidently tell you that you're going to make money. I can tell you that if I look at like something like the P ratios or some Schiller's adjusted P ratio, something, I can tell you that, okay, the market is overvalued at this point in time, but I can't tell you when it's going to correct. So I won't tell you just go and short it. Okay? However, there are points in time that the market, in my opinion, can be predicted to be undervalued. Okay, it can be predicted to be undervalued, and also that undervaluation is not going to remain for like uh, 5 years, 10 years. It's going to correct faster. And by taking advantage of those, by identifying those, when that is true, you can then, over the long term, beat the market. Okay, so this book also has some advice about asset allocation and like how to minimize your fees. And if someone is investing about $500 a month, the advice offered in this book could result in that person having a few $100,000 more by retirement time. Of course, that assumes that the person is also going to is a long-term investor, like somewhere between 25 and 50. And let me again say, uh, investments are risky. Judge for yourself. No promises are made. Okay. Let's move on.